Hello traders, Gary Wagner here, approximately 1:30 in Honolulu, 7:30 in New York on Wednesday, 18th day of August 2021, and this is the daily report for gold and silver. We had silver trade lower today, gold trade fractionally higher US dollar. On today's report, I really want to detail the current resistance levels as gold has moved up, as to where we might find the end of this current rally. We'll talk about that when we look at some charts, but first to the price board. Gold futures basis the most active December contract, traded to a low today of $1,778.80 before recovering. The market did close higher on the day, fractionally higher, up $2.20, and is currently fixed at $1,790. The upticks occurred after the release of the minutes from the last FOMC meeting. This first chart that we are looking at is a daily candlestick chart of December gold futures. On it, I have one basic model that is using Elliott wave candlesticks along with Fibonacci retracement, and I am looking at the three different moving averages, the 50, 100, and 200-day moving averages as key levels of potential resistance. Of course, ever since yesterday's high, which came in roughly at 1798, 1799, we did get a lower high, slightly lower, and a lower low today. This small candle that we're looking at is simply trading currently in Australia, and as you can see, we are currently fixed at 1789.40. My sense is that whether gold runs out of steam in terms of this recent rally at right around $1,800, it most certainly will find some resistance between 1,800 and 1,815, and that is really based upon the three respective moving averages, the 200-day being set at $1,815.10, 1806.30, that represents the 100-day moving average, and then the 50-day moving average, which is currently fixed at 1799.40. And assuming that this was our fifth wave down and we are in some sort of a upside corrective bounce in A, B, and C, we are nearing the completion of our A wave, whether it occurs where we are now, these tops, or finds itself moving above to the 50, 100, or even 200-day, we will then go into some sort of a correction to the downside. That's the counter wave, and that would be our B wave. Typically, on a B wave, we look for the correction to be anywhere between 50% of the move up, the recent move up, to a maximum of 75%. And that's why we have these two areas highlighted here, 1738.40 and 1708. My sense is that if that occurs, we will get a final C wave, which will be a counter wave to the upside and could take gold past highs that it achieved on the A wave. If it does not, it would simply be called a flat. If it goes beyond it, it is a typical ABC correction. Now, this is also going to be based upon the changing fundamentals. And the reason that we're seeing such light activity in terms of the moves of gold recently is because of, one, we are in summer month trading, it is August, and two, we have many market participants waiting to hear any news that comes out of the economic symposium, and that will begin on the 26th of August. And then lastly, the effects of the Delta variant on the economy and how that stifles any kind of regrowth. In terms of an announcement for tapering, many analysts, including myself, believe that while the Fed might mention something during Jackson Hole, it will really be September's FOMC meeting, because then they will have the August jobs report in hand, and that will let them know whether or not there has been substantial progress in terms of employment and employment growth. Right now, we continue to have inflation running hot. The Fed has acknowledged in the minutes that were released today that that could remain high not only throughout the end of this year, but into next year, based upon the effects of the Delta variant as it ravages different parts of the United States. Depending on how we see the market trade, and if we get any kind of substantial downtick, we will then be able to confirm that we are in some sort of a B wave, and we can either look to go short the market or wait to see how it reacts at a 50% and 75% retracement of the move up, which of course is from 1678 up to currently about just shy of $1,800 per ounce. The small gains that occurred today in gold came concurrently with minor gains in the U.S. dollar, with the U.S. dollar gaining 0.05 points or 0.05% and is currently fixed at 93.195. While yesterday we saw a dramatic upside move in the U.S. dollar, you can see it expressed as this large green candle here. Today we got a doji candle, and what is interesting to me is we are quickly approaching the highest value we've seen of the dollar in 2021. That comes in at approximately 93.50. We are currently at 93.14. So if the dollar continues to gain strength, we could see major resistance occur at the level of 93.50. Concurrently, we did have a drawdown in silver futures, basis the most active September contract. We saw silver give up about 18 cents per ounce, currently fixed at 23.48, and that's a net decline of about 0.75%. While we can definitely acknowledge that we have seen a large move to the upside since the dramatic fall, which followed the jobs report, we're not seeing the same type of activity in silver. In fact, silver is now once again trading in a very narrow trading range, on the low side of 23 and the high side just shy of $24 per ounce. We've seen the last 2 days result in lower pricing, and we are below 23.75, which I believe is a key and critical area because it corresponds with the 78% Fibonacci retracement level. Without a move above that, I cannot be bullish whatsoever on silver and would look for the market to continue to track sideways. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.